Morning. This is Market Movers for Thursday to January. I keep saying July for some reason. It's not quite summer yet. January 9, 2014. So we're just getting the year kicked off. Stocks down again. You know, we were down, kind of mixed yesterday, but down on the Dow and the S&P, up on the Nasdaq. And then if you look at the S&P 500, depending on where we close today, we've only had 1 year, or 1 day this year so far that the S&P has actually closed up. All the other trading days, it's closed down, and we're down about 14 points on the S&P so far this year. We're down about 3 today. That includes the 3 points today. So not a huge deal. Close the year out at an all-time high at 1848. So we're off of that to 1834 right now, but again, down 14 points so far year to date. Dow's down another 50 points today. Alcoa reports earnings after the close today. It's the first major company, which used to be a Dow component, is no more, got pulled out of the Dow, but still everyone looks to Alcoa because it's an aluminum maker. They want to see what the impact has been on the economy, and more importantly, what the management team is forecasting for the remainder of the year. In this case, being a report that's right at the beginning of the year, we can get a sense of what they see unfolding for them for 2014, and that'll sort of set the tone in some sense for what the economy could do this year. Another quick thing we don't talk too much about commodities typically. I'm focused mostly on stocks and bonds, but gold down 28% last year, and also silver down 36% last year. And then they just got a major cut. I believe it was JP Morgan or Morgan Stanley, one of the two, cut their forecast pretty dramatically for both gold and silver this year. And they're looking for gold to go maybe as low as $1,000 an ounce. We had 12 years in a row prior to 2013 of up gold price increases year over year. So last year's drop of 28%, is that setting the tone for a different phase, a bear market in gold? Could be. You know, we're going to see rates go up and continue to move up. There could be an indication of inflation if GDP growth accelerates a little bit from here, but with interest rates moving up, I could easily see gold and other commodities moving further down, and that would be my expectation for all the metals and basically for a lot of commodities out there, and in particular gold. Just people are selling gold too. Investors are just selling gold. They're trimming back. They're reducing exposure in portfolios to gold, and I think that's going to continue this year. So it would not surprise me to see gold, which is around the 1220, 1230 range right now. I wouldn't be surprised to see that at 1100 or even lower by the end of this calendar year. So we'll keep an eye on commodities, but all in all, fairly quiet day, although again we're down a bit, and we'll watch for Alcoa's numbers. Tomorrow's employment number is going to be the most important data point this week. That's what the Fed will be looking at primarily to decide whether they want to cut back a bit more on their bond buying program next month in February. Thanks for watching.